Right now, something strange is happening in the global metals market, and almost nobody on mainstream financial news is talking about it. Silver inventories are quietly shrinking. Major buyers are locking in supply months in advance. And behind closed doors, some insiders are warning about a shortage that could shock the entire financial system. The real question is not whether silver demand is rising. The real question is what happens when the world suddenly realizes there isn't enough silver left to meet it. Because if the current trend continues, we could be heading toward one of the most dramatic supply squeezes in modern commodity history. And if you think silver is just another metal, by the end of this video you might see it very differently. Welcome to the Silent Collapse, where we break down the economic shifts and financial signals that most people miss. If you enjoy deep dives into markets, money, and hidden economic trends, make sure you hit the like button and subscribe within the next minute so you don't miss the next analysis. Now let's talk about the silver shortage that some analysts believe is already beginning. For decades, silver has lived in the shadow of gold. When people think about precious metals, gold gets the headlines. But silver plays a very different role in the global economy. Gold is mostly a store of wealth. Silver, on the other hand, is both a precious metal and a critical industrial resource. It's used in electronics, solar panels, electric vehicles, medical equipment, satellites, military systems, and hundreds of other technologies that power the modern world. Every smartphone, every solar panel, every advanced computer chip contains small amounts of silver. And here's the problem. Once silver is used in many of these products, it's extremely difficult or expensive to recycle. That means a huge portion of the silver mined over the last century is essentially gone from the supply chain. Meanwhile, global demand for silver is not slowing down. In fact, it's accelerating faster than most people realize. The renewable energy industry alone is creating massive demand for silver because solar panels rely on silver paste to conduct electricity. As governments push for cleaner energy and expand solar infrastructure, the amount of silver required grows rapidly. Electric vehicles also require more silver than traditional cars because of their complex electronics and power systems. This creates a situation where industrial demand is rising every year, while supply struggles to keep up. Mining companies cannot simply turn on new silver mines overnight. Opening a new mine can take 10 years or more because of exploration, permits, environmental reviews, and construction. And here's another important detail many people don't know. Most silver isn't mined from primary silver mines. Instead, it's produced as a byproduct of mining other metals like copper, zinc, and lead. That means silver production often depends on the economics of entirely different industries. If copper mining slows down, silver supply can fall even if silver demand is rising. Now combine that with another factor, investment demand. During times of economic uncertainty, investors often move toward tangible assets. Historically, gold has been the main safe haven, but silver tends to follow, sometimes even more dramatically. When demand spikes, silver prices can move very quickly because the market is much smaller than gold. And this is where things start getting interesting. Over the last few years, several large financial institutions and metals analysts have quietly noted that global silver inventories are declining. Some reports suggest that above-ground silver reserves available for trading have been shrinking faster than expected. Large exchanges that store silver for trading and investment have seen inventory levels drop during periods of strong demand. At the same time, physical silver demand from investors has surged in waves, especially during periods of inflation fears or financial instability. Some market observers believe this combination of rising industrial demand and declining inventories could eventually create a supply squeeze. Not tomorrow, maybe not even next month, but the pressure could slowly build until the market suddenly realizes something is wrong. And history shows that when commodity markets finally notice a supply imbalance, the reaction can be explosive. There's also another topic that often appears in discussions about silver: market structure. The silver market is unusual compared to many other commodities because a large portion of trading happens through paper contracts rather than physical metal. These contracts represent silver that can theoretically be delivered later. In normal conditions, this system works because only a small percentage of traders ever request physical delivery. But some analysts argue that if a much larger number of participants suddenly demanded real metal instead of contracts, it could create serious stress in the supply chain. Again, this is a debated topic among market experts, and there are many different opinions. But what makes silver fascinating is that the physical market is relatively small compared to the financial market built on top of it. That means changes in demand can sometimes move prices faster than people expect. Another factor is government stockpiles. Decades ago, many countries held strategic reserves of silver. Over time, much of that stockpile was sold into the market. Today, those government reserves are far smaller than they used to be, which means there is less buffer supply available during periods of high demand. At the same time, technology companies continue consuming silver at a steady pace. Each individual device may only use a small amount, but when you multiply that by billions of devices produced every year, the total demand becomes enormous. Think about the scale of the modern electronics industry. Billions of smartphones, laptops, tablets, and smart devices are manufactured every year. Every one of them contains silver. And as artificial intelligence, data centers, and advanced electronics continue expanding, the need for high conductivity materials grows as well. Silver happens to be one of the best electrical conductors on Earth. Now imagine what happens if several trends collide at the same time. Industrial demand keeps rising because of solar energy and electronics. Investment demand increases because of economic uncertainty. Mining production struggles to expand quickly, and inventories slowly decline. None of these factors alone would necessarily create a crisis, but together they could create pressure in the system. Some analysts compare this possibility to previous commodity squeezes in other markets, where years of small supply deficits eventually led to large price moves once the imbalance became impossible to ignore. Another interesting signal comes from the behavior of large buyers. In many commodity markets, major industrial consumers sometimes sign long-term supply agreements to secure future resources. When companies start locking in supply years ahead, it can indicate concern about future availability. In the case of silver, some reports suggest that certain industries are paying closer attention to supply security. And that brings us to a question that investors often ask: if silver is so important, why hasn't the price already exploded? The answer is complicated. Commodity prices are influenced by many factors, including currency movements, interest rates, global growth expectations, and financial market speculation. Prices don't always move immediately when supply and demand begin shifting. Sometimes the imbalance builds quietly for years before the market reacts. This is why some analysts describe the silver market as a spring under pressure. The tension builds slowly, and when the release finally happens, the movement can be dramatic, but it's important to stay realistic. Predictions about shortages are not guarantees. Markets can change, new mines can open, technology can reduce usage, and recycling can increase supply. The future is never certain. What makes silver unique, however, is the combination of industrial necessity and monetary history. For thousands of years, silver was used as money in civilizations around the world. Today, it still holds value both as an industrial resource and as a precious metal. That dual role creates a fascinating dynamic where technology demand and financial demand interact in unpredictable ways. For viewers of The Silent Collapse, the key takeaway is not panic or hype. The real goal is awareness. Understanding how supply chains, industrial demand, and financial markets interact can give you a clearer view of global economic trends. Because sometimes the most important shifts in the financial world happen quietly, long before they appear on the evening news. And silver may be one of those stories developing beneath the surface right now. So here's something I want to ask you. If silver demand continues rising while supply struggles to expand, what do you think happens next? Do you believe the market will adapt smoothly, or could we see a sudden price shock if the shortage becomes real? Let me know your thoughts in the comments below, because I read as many of them as possible. And if you found this breakdown helpful, share this video with someone who follows markets or invests in commodities. Conversations like this help more people understand the bigger economic picture. Make sure you subscribe to The Silent Collapse for more deep investigations into global markets, hidden economic signals, and the financial trends shaping the future. Because sometimes the biggest changes in the world economy start quietly, and by the time everyone notices, the shift has already begun.